Hello traders, welcome to your daily market update for Friday the 12th of June, and we are going to close out the week with it's been a fairly quiet week in terms of economic data and price action. The US dollar has sold off a little bit, but we've been focusing on other markets such as the Australian dollar, New Zealand dollar, and of course the Greece situation won't leave us alone. So we will get into the economic calendar here, and yesterday the employment change for Australia actually ticked up, and we had a lower rate of unemployment down to 6%. The initial price action did bounce on the back of this, but there is some unbelievable scenarios in terms of this credibility of this data, and the rallies were short-lived. The only thing that it did outperform was the New Zealand dollar, and the New Zealand dollar is actually still suffering from the rate cut and Governor Wheeler's statement basically saying they potentially may not be done cutting rates. So they're now trading at 3.25%. New Zealand dollars at a 4-year low after cutting the rates, and I potentially see some further downside in the near term. So we'll have to keep an eye out on that. Moving through into the European session, we did see not a lot of data come through, and it was a very quiet session of trading. But then things really started to heat up around the US session, when continuous jobless claims and retail sales really outperformed for the US dollar. So the US dollar strength was really the story. It probably wasn't quite reflected in the dollar index as what we would all like to have or expected to see. As you can see there, it did tick up, come off a little bit at the end of the session. But in my eyes, now that we've got strong employment data and consumer confidence has started to tick up, so we're starting to see them spend in retail sales and other consumer aspects, I really think that it's given the Fed a green light to raise rates in September, and the market will probably jump on board with that analysis as the data continues to roll in more positive and we get closer and closer to the date. So for my thinking, the US dollar strength won't be too far off. Now, looking forward into today's session, we don't have a lot coming out either. We have a little bit of German data, Spanish data, but nothing of importance at all until we move to the US session. And then in the US session, everyone's going to be focused on PPI data coming out, and the Michigan consumer expectations is really where the market is going to be focused, and that'll close out the week. The second week of every month is the quietest week in terms of economic data, but the next 2 weeks things do heat up, and we should be getting really focused on the US dollar once again. The Greece story, the negotiations there continue to drain and drag out. So I think that that's going to continue to be negative for the euro. And I'm not sure whether we're going to get any sort of resolution anytime soon. The market's a little bit more optimistic than me. I just believe that the political games are continuing. And we'll have to just keep an eye and our finger on the pulse, as you never know what's going to happen. Let's move over to the charts. I've already been onto the US dollar index. As you can see, it is trading in this flag arrangement, and I am expecting a breakout to the upside. Potentially, we do have found a bottom here after this recent correction with a whole host of interventions there. We had Kuroda come in and talk, and that really weighed on the US dollar as he spoke about the yen. And I think that with the US data coming back into focus from next week onwards, we could see this actually tick up. So we'll keep an eye out for that, and we'll see how things play out. Let's go over to the New Zealand dollar. As you can see, just absolutely got belted on the surprise interest rate cut and the fact that they've said that they're potentially not finished cutting rates. So further downside is more than likely. If I just zoom out for a weekly chart and have a look for you, there isn't a lot of support until the levels that we've just had there at 69.5, and then it's down to 68 cents before we move through the next levels of support. So we'll see how things play out. It's really going to come down to the market's interpretation of his comments and whether we start pricing in some further rate cuts. I believe that will continue to be the case, as well as with the US dollar strength, that things could unwind. The Australian dollar, as I mentioned, did find some support on the back of the jobs data, and I'm on the 4-hourly chart. You can see it popped up, but then it ran out of momentum quite quickly. And really here on the daily chart, you notice that uh, we did have these big falls, and we are just in a consolidation pattern right now. And I think that I'm still eyeing off a breakdown below 76 cents, and a breakdown below that would definitely open up to a longer term move lower. But for now, we are consolidating. Keep that in mind, and I think we're left subject now to the US dollar as the Australian dollar data has come out, and the market's done its thing. So the US dollar will manipulate the price from next week. The euro has, we did have a bounce and we have been playing around, but really it is just that. It's a consolidation pattern that we're starting to see through this period, where we did have a breakdown and then we had some optimism back that a deal was coming to fruition. It doesn't look like that's the case, and the market is quite tired of the Greece story, as am I. But I think right now $1.14 is a fairly significant resistance level, and we can continue to see prices down lower as a result of some potential strength in the US dollar. And I think that the longer that this drags out, the more that the market is going to start to price in euro weakness. But wait and see how that plays out. The Great British Pound actually is quite strong yesterday, and I think today we do have a speech from McCafferty, and he is a more hawkish official in the UK, and he could actually just send the pound a little bit higher, and with that we could see some moves in the euro versus the Great British Pound. But the pound right now is quite strong, but really it could come off as soon as we get some strength from the US dollar, and potentially forming somewhat of a head and shoulders pattern, with the head forming through here, and we've got shoulders either side. So I'm keeping an eye and looking for a topping pattern here in the Great British Pound, and we will see how it plays out, but really it's going to be left into the hands of the US dollar index. US dollar versus the Canadian dollar has sold off. We did have a really nice bounce, and then we have sold off as a result of oil prices have been quite strong lately. And we did break through this historical support level, and we've come back up, tested the back of it, and failed. So for me, that's giving me a nice indication that we are going to move lower. As you can see here on the 4-hourly chart, it has provided a really nice hammock formation, and I think that we will be getting a rejection of this price, and we could be continuing lower. We'll have to keep an eye on oil, and we don't have any Canadian data really worth watching, so the US dollar is going to probably control this one on Friday today. US dollar versus the Japanese yen. We have seen this big pullback here, and that was on the back of Kuroda's comments. And since then, we've had some positive US data, and we've initiated this bounce. Yes, we have flamed out, and I would love to see a breakout above this level. And somewhat, this is a very similar chart pattern to the US dollar versus the Canadian dollar. So keep that in mind in terms of your correlating pairs, because the US dollar did have a bounce, and we did get a little bit of a flame out towards the end of the session. But I think that we will be making a run back up towards it, and we'll see what tonight's or today's US data has. But I'd love to see a close for the end of the week above $1.24, and that would be a very firm signal for me. I really do like the US dollar versus the Japanese yen with a long-term view down at these low levels. I think it's not a bad place to be buying, as we did get a breakout of this triangle. The historical top of the triangle will be acting as support at 122. We haven't quite got down and tested that level, and we may not get an opportunity to if the data continues to improve in the US. Well, that's it from me this week. Thank you for tuning in. I'll be back again next week. So until then, trade well.